Now, one of the things that we are seeing coming from China is that in terms of competition, it is quite fierce. It is for this reason that we are seeing some of the automakers losing some serious market share there. I mean, it is with no doubt that the models or the cars that are being built by China automakers are very, very of good quality, and they are able to compete with some of the international brands like Mercedes, BMW, Audi, and the others, which is something that, of course, it's bringing some heat, leading to some of these automakers reducing or cutting their revenue projections for the year. This is what we saw in last year from Mercedes. This is what we saw last year from BMW, adjusting their revenues because of the fierce competition they're seeing in China. Now, this competition, it is ending up resulting into the automakers adjusting, cutting prices on their vehicles. We saw this, even those German luxury brands, Mercedes, BMW, cutting, adjusting their price to try to compete, to try to continue selling their cars in China. Our very own Nio is currently giving price cuts of around 5,000 RMB for their vehicles over 400,000 RMB and 8,000 RMB for their vehicles over 400 RMB. And this is your vehicles like the ET7, ES8, EC7 and ES7. They are offering 8,000 RMB, whilst for the others you get 5,000 discounts, which shows you how fierce the competition is. Now, according to the report we just got today, China auto markets saw 227 models that introduced price cuts or that were put on new prices because of the price cuts which those brands introduced onto the models. And apparently this is way more than what we saw in 2023, because 2023 it was around 148 cars that introduced price cuts, and these 227, what it is showing us is that things are continuing to become tough in China. It is not easy to sell cars in China, and not only is this affecting our EV stocks or new energy vehicle car makers like Nio, but even the gas cars are having to introduce price cuts so that they can obviously try to sell some good units in China. This is what we are seeing. So 148 in 2023 compared to 227 in 2024. It shows you that it is tough out there. It is tough for company to obviously make a fortune or make a dime from selling cars, because their gross margins, when you introduce discounts, it compromises the gross margins. But it all depends on how much or how low can you go, and the lower you go, the lower your gross margins will go down, or your vehicle margins will go down, right? So yeah, man, China auto market 2024 price cuts, 227 models introduced price cuts, also price cuts, which is something that of course was not good. Now, these price cuts were mainly seen in conventional gasoline vehicles and battery electric vehicles, which 88 models were gasoline price cuts which were introduced for engine cars, right? And 82 models were coming from battery electric vehicles. Hybrid, there were 17 models with price reductions or price cuts. Like I said, this shows you the fierce competition that is in China at the moment. I mean, new energy vehicle models saw their average price cut 1,000 RMB, or equivalent to 9.2% of the total price of the car. This is something that is not good. Gasoline cars saw price reduction to 13,000 RMB, or 6.8% of the total cost for the car, which again, it's not that good. So some of these car makers, when they are cutting these prices, they are keeping those prices there. It's not like when the situation becomes better, they are dropping off their price cuts. They are keeping them there because they want to compete. Whereas our favorite EV stocks like Nio, at a certain point when they see that the fierce competition is at ease, they obviously reduce the incentives which they are giving out to those that are buying their cars, discounts, which is always good, because like I said, these discounts, these price cuts are really compromising the gross margins. They play with the gross margins, which as a result, you find companies selling high units or selling very good delivery or reporting good deliveries, but gross margins being compromised. This is the same thing that we saw In fact, in all of the automakers maybe selling in China, Tesla suffered from gross margins because of price cuts or discounts. We've got Li Auto, we've got our very own Nio, we've got XPeng, all these automakers, because of these price adjustments, price cuts, they struggle to sell, and therefore it led into them seeing their gross margins dropping quite sharply. I remember for Tesla, gross margins in Q1, I think, if I'm not mistaken, they were over 20%. Then as the year, I think Q2, Q3, gross margins for Tesla fell below 20%, which shows you the kind of competition they are seeing out there, especially in China, which is something that obviously as investors we need to take into cognizance when we're investing onto Nio. Yes, price wars might take some time until they get better, right? But as it stands, they are still there, which is why Nio has been offering 0% interest. Li Auto came and offer 0% interest, same as Nio, for like what, 3 years. So those that buy Nio cars right now or place their orders for the first 3 years, they won't be paying interest for their loan they took to buy the car, which is something that these automakers are trying to do, to try to capture as many orders as possible, which obviously, like, again, it shows you that the competition is tough. It is fierce competition, tense competition in China, and therefore those that are not adjusting their prices might not survive this. And obviously, yes, we are talking about price cuts, incentives. What also sells more, or what makes company like Nio do well, it's because of their technology, because of their after sales services. So it's not just about price cuts. If still your car does not have as much technology as another car brand, consumers are going to go to that car brand, or they're going to go to that car with obviously more technology, because they know it will be value for money for them, because it will make their life easier, as some of the features in the car will be advanced as compared to a normal regular car. So as you are introducing, or as these companies are introducing price cuts, they need to also think about innovating. They need to think about after sales services, because that also matters. I mean, I can't just go buy a car with $50,000 and technology is not on point. Technology is still being dwarfed by a car that is like what, $30,000. I'd rather go to the $30,000 than paying $50,000, because that $30,000 might be value for money due to the technology and the after sales services which I get after buying that car. Which therefore, it is also important that during this fierce competition, they don't drop the quality, the technology, innovating. They don't drop the ball. It's important, because that will result into the automakers doing so well. I mean, 18,000 RMB. You and me can agree that if on average new energy vehicle cars, they were cutting the prices for their car by this much, it just has to show you that it's tough, man, out there in China for you to sell a car. Sometimes you would have to compromise gross margins to get the sales or to get the deliveries, which obviously it's a very tight spot, but it will fade away. Remember, the more this competition carries on, some of the car makers are going to be left behind. Some of the car makers are going to don't want to fight anymore and leave the price war, the fierce competition, and it's going to result with a couple of car makers or car brands being the one who win at the end of the day. And trust me, I think Nio will be one of the car makers to do very well, because Nio right now, you'll know that they're not only selling their Nio main brands, but they are also selling cheaper EVs, Onvo and Firefly, which these will close in the gap that obviously sometimes we see of Nio selling not that much, because their cars are quite pricey, which obviously it's a good thing, right? So yeah, man, I'm very happy, I'm excited. Just thought I'd give you this quick update. Tell me what you think about this. I think blue sky is coming. Those that are persevering throughout the headways of the share price will most definitely be rewarded with time. Blue sky is coming, long term will win. That's all from me, and God bless you all.